Hello and welcome to BQ Prime. You're watching an earnings conversation with Dr. Reddy's Labs, and joining me is Mr. M.V. Ramana, who is the CEO of Branded Markets India and Emerging Markets. Mr. Ramana, thank you very much for joining us on BQ Prime. You got a good set of numbers. Net profit, though the profit was hit by the one-time impairment cost, your top line has gone up by 15%. What has been the kind of market demand and for this quarter, especially the US market?
Sure. See, I think, Sajid, so as an organization, what we had done in terms of our strategy is to ensure that we diversify. And so from the US market, we have started to then also work on both India and emerging markets. And what you would have seen now for the full year, the branded markets are as big or maybe slightly even bigger than the US market, right? So the diversification actually has worked for us. Second, I think we continue to work on getting in the new products. So we've launched about 70 new products in the US and about 85 products into the emerging market. So this continues to be driving the growth. And in both the markets, we continue to work on the productivity. So these have been the three reasons why I think the numbers have come out good. So the branded markets have grown well, both in India and emerging markets. And what I think is also something very heartening this year for us has been the fact that we've gone back to the $1 billion mark, US, which we had done a few years back.
How is the market looking, especially the North America, US markets? Because we have been hearing about a lot of pricing pressure coming in. Though despite the pressure, you've been able to post decent, growth in that market. Have you seen that pricing bottoming out there, or is it still going to be there? The pain is going to be there for a couple of more quarters.
So Sajid, I think the pricing pressure is something in the US. It is part of the business model. So we do expect that to continue. But I think what we have been working on is how do we get our new products in? How do we work on our operational efficiency so that we would be able to increase our market share? So these are the two things that has played out. And I think we're also expecting to play out into the FY23 as well, both the new products and operational efficiencies.
How many of those products in the US you would be withdrawing yourself out because now it's not sustainable to sell that at that pricing point? While you are adding a good amount of products every year, every quarter, there would be some products that you're going out of it as well. So how many, what is this, what's the entry and exit rate which is happening in the US?
See, I think if you see, at least 50% of our revenues in the US comes from the top 10 products. So both in the US as well as in the branded markets, we do have a tail. And what we do every year as part of the supply chain process, we look at what doesn't make sense, where we feel that we don't have the opportunity to grow the market share, or where we did not come into the market at the right time, we let that go. But the rest of the products, we continue to work both on the branded markets as well as on the US market on how do I improve the life cycle of this product. Whether improve it by improving the cost and thereby improving the market share, creating more capacities, or in the case of the branded, how do I continue to work on more levers of growth, whether it is in the current core, whether it's in adjacencies, whether it is on consumerization. So continue to launch new products, continue to look at what might be the tail which doesn't have the opportunity to grow, let that thing go. But then what is core, both in terms of US and Europe, we will continue to grow them.
What is that tail? How big is that tail?
So it is not significant. It's not significant because we are very, very conscious on what we want to launch, whether it is in the branded markets or in the US or in Europe. So we're conscious of that. It is not significant. So we are churning it as we go along so that it does not create complexity from a point of supply chain as well.
Another thing which is happening is your focus back in India and emerging markets. We saw India growing by 15% in the quarter. I think on a full year basis is around 26. So what is the kind of revenue that you are getting from COVID?
COVID, we have been able to get the revenues largely in the first and the second quarter. After that, it has not been significant because it was more tied to the waves. So overall, the impact of COVID in terms of the on top of the base business was more on the first and second quarter, but
Mm-hmm.
whatever growth that we are getting now is largely on the base business.
And any particular update on Sputnik? How much you've been able to sell, and any revenues that has been accounted for in the Q4?
Sure. So total amount of Sputnik that we sold is about 1.2 million. In terms of the approvals, you would have seen that we have got the approval for the Sputnik Light as well as for the booster. So we are now in the process of getting ready to offer the booster for the people who have taken the Sputnik. We are also doing a trial as a universal booster. We do expect that to play out in the next couple of months, and we'll see how that can be taken. Because Sputnik, so far, we have largely sold in the private market. And once we get the universal booster, we will see how that plays out for us.
All your segments have done good growth in the quarter, but pharma services and active ingredient, we saw some degrowth coming in the quarter. Why is that?
So, in the beginning of the COVID, there has been a significant amount of stocking up that the pharma companies had done, especially the ones who are our customers for our external API. So that played out in the current year, as well as some amount of price erosion. So we do see now the stocking levels of our customers have come down. So we're expecting to see the growth pick up this year for PSCI.
And do you expect that to remain in this level, or there would be some growth coming in the coming financial year?
No, so we do expect that with the new launches that we have and the amount of effort that we're putting in to get the DMFs across, this will continue to be an important growth lever for us, because this is also important not just for the external sales, but also for the success of our generics. Because of this backward integration, we have continued to do well both in US, Europe, and the branded markets.
Mr. Ramana, I know you did an impairment of 796 odd crores in this year. Last year also we saw an impairment coming in. Last year it was said to be a one-off. This year it was said to be one-off. Where is this impairment coming in from? Are there any more impairment that can come in the next financial year? And how do we handle that kind of asset so that impairment doesn't come in?
Sure. So I think this is again going by the way in which we are guided by our accounting policies. So where we see that there is a value of an asset that goes down, and whatever is recommended by the auditors, that is something that we come back to. So this, I would not be able to forecast into the future, but then these have been some of the assets that we had in the past, and as and when we get recommendation from the audit, we would have to take a call on it.
Okay. In the selling and distribution expenses also, you have taken 100 crores of provisioning, which is there, which is, I think this is with respect to Texas. What is this case about, and is 100 crores be sufficient provisioning for that?
So this is a very old case, so almost a decade back, where I think this is something that we feel is good enough for us, and we would be able to settle this. And with the way in which we have discussed internally, as well as with our auditors, we feel that this is appropriate.
And when do you expect the settlement to get over?
I don't have a definitive date on that, but hopefully soon.
How is the European market looking? You saw a good amount of growth coming in the European market as well. What are the kind of products which you have launched there?
So we have been growing well in Europe, and Europe story has been on two planks. One, when we started off, we did a EU5, and then once we started to see good amount of traction in EU5 over the last 2 to 3 years, then we decided to expand. So this year we've expanded into 5 more geographies within Europe, and at the same time we have been able to launch new products as well. So as a consequence, we have been able to get growth.
How about your exposure to Russia? I mean, have you taken any provisioning for your exposure to Russia, and how do you see that market evolving? Do you still plan to be there in that market, given the fact that you have sanctions and others which are coming in, or you want to exit that market by selling off those assets there?
Sure. So we have been in Russia for the last 30 years, and even now we are absolutely following all the rules of the land. No pharma company has exited Russia. There have been some companies who have decided to hold on to promotion or to the investments, but being an essential pharma being an essential segment, all of the companies continue to operate in Russia, and we continued our operations in Russia as well.
So how is the trade happening in that sense? If you continue to operate in Russia, there is restrictions on getting the recoveries from Russia. How is it happening? Have you already uh, part of that entire group of exporters who are coordinating with the Reserve Bank of India and the government get the money back, or is a special system been set up for this kind of transactions?
Sure. So today, as on today, we do the business in rubles, and what we have also done is we have hedged most of our exposure. So the next couple of quarters, our exposures we have hedged. And today there is no issue as far as repatriation is concerned. So we continue, but at the same time, we continue to closely collaborate with the government as well, and we will see as we go along.
What is the total amount of hedge that you have for this market?
So we have hedged quite decently for the next several quarters.
Okay. What is the total trade, annual trade coming in from Russia? Just to get an idea of it.
The total amount of business that we do in Russia in the local currency is about 20 billion rubles.
Okay. And you have done hedging for the entire thing, or is it there is a growth coming in because of the higher demand of for drugs coming in now?
So there has been a higher demand in the month of March where people have stocked up. We do expect that to normalize into the Q1. So based on our net exposures between the local expenses and what we export, we have done the hedging.
How are you handling the raw material and supply chain constraints? Because that's something which has hit everyone, not just you, but all the entire industry, and that's also suppressing your margins as well. Uh, how are you handling that, and where do you see that raw material cost bottom means increase, which is spike, which we have been seeing, bottoming out or peaking basically?
So a couple of things that we are doing as far as the escalation in the costs are concerned. The first is that we're not dependent on a single source. So we have been able to first de-risk as far as the source is concerned on some of the key materials we have been able to in-source. The second thing that we have done is we have increased significantly the sea freight compared to the air freight so that we are able to bring down. And the third is to work on the operational efficiency. These are the three things that we have done. So overall, the impact has not been as severe. But I agree that because of the current situation, this is something that the entire pharma industry has impacted one way or the other.
Because we've been talking to a lot of specialty chemical companies who supply to you as well, and they've been saying that the prices have gone up, but they have a clause of passing on the prices to you. So at your end, not all prices can be passed on as part of the drug price increase. So how what is the kind of cushion that you have within your system as part of your cost efficiency to absorb that kind of hike?
So as I said, there was a decent balance, let us say, between air freight and sea freight last year. But this year we have significantly upped the sea freight. So that is one way that we would be able to reduce the cost. So you're completely right that not all of the costs can be passed on to the consumer, and that is something that we are conscious of. But the way in which we have de-risked the supply chain by having alternative sources and operational efficiency, the impact of that has not been significant for Dr. Reddy's.
Okay. Finally, Mr. Ramana, you have had a lot of launches in FY22. What is the number of launches you're planning for FY23? Any significant molecule or drug which that is expected to be launched, or any exclusivity which is coming up?
So we do have a big launch that is coming up in the US, which we expect to do in this fiscal. Good number of launches in all of the markets. So on an average, we launch between India and emerging markets about 100 products. We have a good number of launches coming up in both emerging markets, India, as well as in Europe. So we will continue because this is a very, very important growth lever for us. So we will continue to work on that.
What is the number of launches in the US?
So we do have a good number that we have planned as we go along.
Which is the big launch which you're talking about? Which will bring in?
We have the generic Revlimid launch that is planned in the current fiscal.
Which quarter will it be launching?
I would not be able to tell you the quarter, but it will be the fiscal.
Okay, so means the full impact will not come in this FY23, but may come in FY24 for that?
So we will see the impact in FY23.
Okay. Mr. Ramana, it's been a pleasure talking to you today. Thank you very much for talking to BQ Prime. Thank you.